But joining us right now is a guy who called it right last year. Jay Woods is the chief strategist at Freedom Capital Markets, also a CNBC contributor. We wanted to talk to him because basically you said the market was going to be where it was right now. So I shouldn't say how surprised were you, because this was on your bingo card, Jay.
Yeah, it played out the way we thought it would. We thought the first half of the year would be a little problematic with the tariff implementation. We saw that come to fruition. I didn't think it would be as rough as it was after Liberation Day. But we then began to just slowly rally back and pick up momentum in the second half. Maybe we got lucky with the call of 6,900, but the way things played out with technology leading again, strong financials, that was the way we thought it would happen. Now, as we end this year, people want, okay, well, what's the next call?
Yeah,
well,
so do it again, Jay. Do it again.
Yeah, it's so easy, Andrew. No, we think the bull run continues, but it's not going to be the stampede that we're used to seeing. We have 3 consecutive years of double-digit gains. That's happened 2 other times since the millennium. That happened 2019 to 2021, 2012 to 2014. The only time we've had more than 3 consecutive years of double-digit returns in the S&P was .com. Now, everyone wants to compare this to .com, but I think this time is very different. I think the bulls are going to have to pasture for a little while, and the leadership is changing. We've seen a broadening of this market. That broadening is going to continue. And the technology side of things, there are going to be winners and losers in technology. It's not AI is lifting all stocks. And as a result, some of those mega caps may take a little bit of a pause. And when they're not leading, the numbers won't go as high as we think. So we're looking for, an S&P return into the 7,200s, 3 to 5% from current levels. A boring normal year, which will be far from boring, but the leadership is what is going to change. And then we have a lot of road bumps. It's a midterm election year. That's never an easy year to get through. I think it's going to set us up great for 2027. If there's gridlock, we love gridlock, at least from a market point of view. And then let's look at some of the new leaders. I like the transports a lot.
Well, let's talk about that, Jay, because if you think we're only living at a 3 to 5%, up world, which on a relative basis to what's been going on is not great, and other people are going to look at that and say, well, maybe I should just live in the bonds, live in bonds or something else. Who become the new leaders? Is there a group where you say you think there's outperformance?
Yeah, well, I still love the financials and the industrials. The financial sector's been on a tear. I look in the big banks. J.P. Morgan just broke out to new highs yesterday. Goldman Sachs on a run. I think Goldman needs to split their stock, or the Dow is going to be parabolic with the returns and the volatility we see as a $900 stock moves. But my favorite stock there is Citigroup. What Jane Fraser has done there has been remarkable. She's thinned the herd. She's turned things around. And now we have tailwinds for financials. We've got M&A activity. We've got IPOs coming to this market. And then the one sector that just broke out also is transports. So if you want to go back to old Dow theory, the industrials and the transports, that's what you want leading. At least, some of the old timers want leading. But those sectors look strong to me. FedEx on the verge of a major breakout. It's tested this $300, $290, $300 level several times. UPS turning around. The shippers, Matts and Kirby, no love there, but they've started to turn around, broke major downtrends, and then the truckers have been on fire. So this is the sector that I think is going to lead. It's not going to be sexy. Right. It's not going to make headlines, but it's going to be slow, steady growth, because growth has been the story. The economy is growing.
Jay,
it's just, go ahead, Andrew.
Here's the thing but this is the thing I want to understand. If you look at the markets and you say to yourself that 2026 is going to be a super volatile year, not a massive up year, that is going to have some impact on confidence. And to me, the financials specifically have always been a barometer of confidence. When you have IPOs, when you have mergers and acquisitions, when you have, private equity folks buying and selling stuff, in an environment where there's questions about where we're going next, that often gets hurt. No?
Well, let me push back. Consumer confidence hit record lows this past year. And what did the financials do? They're at all-time highs. So, yes, it will hurt confidence, but the bottom line is these companies continue to hit it on all metrics, and earnings matter. So for the financials to pull back a little bit, I think it'll be a great buying opportunity, because when financials move, they move in cycles, and we get nice 2, 3, 4-year runs out of them. And I think that's what we're seeing now. We have an administration that's very financial savvy. The roadblocks, the stumbles this year, there are two that really have me concerned. This SCOTUS ruling, whenever this comes out, if they deem the tariffs illegal, what's that going to cause? It's going to cause uncertainty. What killed the market earlier this year? That tariff uncertainty. We already have Costco having litigation saying, look, if these are deemed illegal, we want our money back. And that could have a chain of events that could cause a little trepidation for a month, 6 weeks, until we figure it out. The administration is going to find a workaround. The companies will figure things out once they know what the exact tariff situation is. So that's my one caveat that could cause a big stumble out of the gates. And then we're going to have a new Fed chair. I think Jay Powell's legacy, the next 3 meetings, are crucial, because he's going to want to declare Fed independence. The Fed is independent. We have 4 new voters. They're going to want to, get their names out there, because, we know Fed officials now. This is a new thing that we know who these voting members are. They talk a lot more. I'd rather just not know who these people are and let the Fed do their business. But it's going to cause volatility in the market, and it should be interesting to watch.